Also, what are we talking about when it comes to commodities market updates? Let's get this round as usual. Thank you, folks at Financial Derivatives, the team of research analysts bringing out the latest in the world of commodities. But let's spend 1 or 2 minutes quickly to talk about oil. Oil prices may rebound in the long term. Well, everybody hopes that happens because now it remains stubbornly low at around $45 a barrel and looks like nothing will change for the near future. Ada Konobi is with FDC. She's a research analyst. Thank you very much. Good morning for coming.
Good morning.
Yes, thank you very much. You agree with some folks who believe that, well, it looks like we're in for a long decline in terms of energy prices.
Yes, we believe that oil prices will actually trade at current levels in the short term till the end of 2015. But however, in the long run, 2020 oil prices might pick up. And this is on the back of increasing U.S. stockpiles and the slowdown in the Chinese economy. And we know that this week, the Japanese manufacturing confidence index fell 3 months. I mean, at the lowest level since 2011. The Chinese stock market declined 1%, and the factory output from China declined about 5.7% compared to analysts expecting a 4.8% decline. And generally as well, the manufacturing index and the fixed asset index from China declined. So the general slowdown in the Chinese economy and the crude inventory buildup, American Petroleum Institute forecast that crude stockpiles will increase 6.3 million barrels to a total of 468.1 million barrels, much higher than what a Wall Street Journal analyst predicts. They predict a 1.1 million barrel increase. So all these are pulling a downward pressure on oil prices.
Do you think anything significant is going to be on the table when OPEC meets in just about 3 weeks?
Most analysts believe that we don't expect any surprises from the OPEC meeting. They are still stuck on their production policy, and we know that it's beginning to affect the non-OPEC producers somewhat. The U.S. production is somewhat declining because they can't continue to produce at current levels. So we don't expect any changes in policy, although we have the mushroom countries are pleading that they try and reverse the policies, but I don't think anything is going to happen.
Well, okay, now the ministers are in place, the cabinet is here. Folks are going to talk about them for a couple of days, perhaps a few weeks. But I think in the next 2 weeks, folks are going to focus more on year-end. Everybody's going to talk about buying wheat, flour, palm oil, whatever you're going to do. Those who got weddings, those who got a lot of things to do. It is time to go shopping, isn't it?
Yes, we're coming into the Christmas season, November, December festivities. Prices generally skyrocket at this time of the year. Wheat prices, wheat flour has increased by 100 naira from the beginning of November. And in the global commodity prices, actually, most grain prices are declining, corn and wheat specifically, on the bullish outlook from the USDA. So corn production in US actually was at record high at 13.69 billion bushels, and yields at 168.8 bushels per acre. So all these are pulling downward pressure on corn prices. And we know that Argentina as well, the current presidential frontrunner, if he wins this election this month, production in Argentina could increase 30% as long as he keeps his promise on reducing export tax. So generally, corn and wheat prices are bearish at the moment.
If prices keep moving on from here, from inflation expectations for Nigeria for October, you folks forecasting a reading that will be around 9.5% for October. And you think if things trend up this way a little bit, we could see a gentle movement in that towards the final 2 months of 2015?
Despite the fact that in the global commodity prices, grain prices are low, generally in Nigeria, we still have the forex restriction and we have the devalued currency. So say you import this product into Nigeria, the current microeconomic conditions will literally offset any gains we have if we import this commodity. So we still believe that inflation will go up about 0.1% to 9.5%, and because this is the festive season as well.
Again, with the since June 2015 forex restrictions, do you see these feeding into this commodity spot prices locally?
Of course it is. It is feeding into especially sugar, because we import raw sugar to refine into finished sugar. Although we know that they're already focusing on local they're really focusing on local production in Nigeria, and we know that the federal government looks to increase the rice production and wheat production in the next 24 months and in the next 26 months. So hopefully probably won't have this problem of looking to import rice and wheat into the country.
Are there other external headwinds, as you put it, in terms of perhaps weather conditions and other conditions that could buffet things a little bit as we run out of the year, as it were?
In Nigeria, we don't really accept unforeseen circumstances anyway, but generally weather is good. The dryness is actually affecting cocoa production anyway, and in the global market, the El Nino is affecting cocoa production and sugar production. But in Nigeria, generally, we think the weather is good. Probably our issue is still infrastructure, moving these products from good roads.
One end to the other.
Exactly, one end to the other. But probably January, February, we expect prices to come down as school resumes and the festive season is over. So
folks are not really happy. If you look at how this, if you look at the stock market, I'm sure you guys keep one eye on the stock market, especially for this stocks or agro-allied commodity companies you track, like Nestle, Guinness, Dangote Sugar, Dangote Flour, Cadbury, Flour Mills, Nigerian breweries. It looks like we haven't seen this flow through of prices impacting, from the spot commodity prices to those stock prices.
Generally, the third quarter of most FMCG stock market prices was negative. Most companies actually did poorly, probably just because of the policy uncertainty, the restriction of currencies, and a couple other microeconomic conditions in the country. But we believe that now there's the ministerial cabinet in place, there should be some sort of direction, and that should probably increase some sort of lead to positive sentiments from investors, and second quarter 2016 or second half of 2016 results should pick up significantly.
Okay, I'm going to ask you one question, but not today. Perhaps in the next few weeks down the line, where will you be shopping for some of these commodity stock prices, looking at price bargain? Let's keep that. Perhaps we're still just about the 12th of November. There's still enough time. You don't buy rice
people buy rice now because prices will go up in December. But then we know that rice, they're trying to ban the waivers. So people are actually buying rice now, and there's the local production as well. So yeah, price of rice will go up.
I better hurry. Exactly. I better hurry. Okay, let's hurry up with the rest of the program. Thank you very much.
So much.
Ada Akonobi, research analyst at Financial Derivatives.